Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Barney, Head of Global Risk Solutions at BNY Mellon, to discuss the third quarter results of BNY Mellon's U.S. Master Trust universe. It's great to have you with us, Francis. Welcome to Trade Talks.
Thank you.
Tell us about the report and the types of insights BNY Mellon draws from.
Sure. So the BNY Mellon U.S. Master Trust universe is a data set that we leverage from BNY Mellon's institutional custody and accounting clients. So these are clients that are large institutional asset owners, such as pension plans, corporate pensions, public plans, endowments, and foundations. And they've hired BNY Mellon to support their institutional investment programs, be their custodian, and calculate their official books and records, their returns. So the fact that we are calculating their official books and records gives us the ability to aggregate data and provide some analysis across the market. There's about 2.6 trillion in assets in total that are represented in this asset pool. So it's a statistically significant portion of the market. There's something like 450 different institutional plans that are included in this data set.
Right. And what were the highest performing plans? What types were really performing well this year?
So this quarter, it was really the endowments that had the highest return, and that was driven primarily by their allocation to alternative investments. So we consistently see the returns being driven by asset allocation, and largely the biggest difference in terms of types of institutional investors that drive the asset allocation is the allocation to alternatives. That's where we see the biggest difference. We also see different allocations to fixed income, with the defined benefit pension plans really increasing their allocation to fixed income over time. But this quarter, the story is really driven by the allocation to alternatives.
Yeah, it's really interesting because that jumped out to me as well by a significant amount of basis points. Yeah. Private equity, we're seeing more asset flows. Hedge funds, we're seeing more asset flows. To your point, alternative spaces. Why do you think that is?
It's really the investment objectives of the different types of the investors. So the defined benefit pension plans, their definition of success is liability-driven investing, is assets sufficient to meet their liabilities. The definition of success for endowments and foundations is really alpha seeking longer term, and public pensions to some extent as well. And so that has, that aligns with the allocation to private investments and to alternative investments. And we've really seen that trend over years. The allocations to alternative investments within the endowments and foundation space, and to some extent within the public pension space as well, has just been increasing over time.
All right, Francis, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.